What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I reveal to you my dividend stock buys. I reveal to you my income. And at the end of the month, I show you how many shares I own with the revenue that I earn from my dividend stock. So everything's free for you. A lot of people will charge you money to see their Patreon accounts. Some people charge a lot of money to see their dividend portfolios. I do everything for free, so take advantage of that. Subscribe and hit the notification bell so don't miss future videos. So I love high yield dividend stocks, and there's been some recent news and trends about real estate investment trusts that I own that I need to buy more. I own a few of these. One of them I'm reconsidering buying because they're finally making changes and waking up and got to go back to your principles. They're finally going back to their principles. So that might be buying material for me. These are diversified REITs, and that's very important to be well diversified with your real estate investment trust portfolio because, just focusing on one sector is not a good idea. It's very important to be well diversified. Just look at VNQ ETF inside of VNQ, how well diversified it is. So again, everything's free. Check out my YouTube channel, hit that subscription button. Let's check out these dividend stocks right now. And right now, I absolutely love Vici Properties. It's down right now. At one point, it was beating the S&P in the past 5 years. With it being down, I'm capitalizing and I'm buying more shares. I have them in my M1 Finance dividend portfolio, and it distributes some very nice passive income. Vici Properties is sitting at 28.82. Average volume is 6.61 million. The market cap is 30.06 billion US dollars. Year range is 26.63 to 34.05. Day range is 28.78 to 29.25. Previous close is 29.19. Now, remember the rules of a real estate investment trust. 90% of what they make have to go back to investors. So looking at the revenue trends and FFO, which is very attractive. I already showed you the FFO in previous videos. This made me buy Vici Properties, and I really love the diversification, the way they're expanding their business philosophy and the dividend growth. So let's go over the revenue trends and dividend history. So with the revenue trends, this is what attracted me to this real estate investment trust. So when I look at dividend stocks, and if, again, check out my videos, they're free, I go over the revenue trends. I think revenue is very important. Of course, funds for operation is extremely important with real estate investment trust, but I want to see an increase in revenue, and that will grab my interest in buying a real estate investment trust. And if you look at the revenue trends on Vici Properties, and again, it drives me nuts because I've taken Latin in high school and in college, and it's actually pronounced wiki in Roman in the Latin language. So, I may accidentally say wiki, and it drives me nuts to say Vici. But revenue trends, look at this, annually in millions US dollars. 2017, 187, 2018, 897, 2019, 894, 2020, 1,225, 2021, 1,509, 2022, 2,600, and then 2023, 3,611. This is annually in millions US dollars. Huge increase in revenue. Now let's go to the dividend history. So looking at the dividend trends, this is another reason why I'm attracted to Vici Properties. So look at the quarterly dividend growth. 2018 it was 16 cents to 26 cents to 29 cents. And then 2019 it was 30 cents. Then in 2020 it didn't cut its dividend, which is quite impressive. It even jumped to 33 cents before the vaccine was distributed. So that's still quite attractive. Then in 2021 it jumped to 36 cents. And then in 2022 it jumped to 39 cents. And then in 2023 it jumped to 42 cents. So hopefully there will be a dividend hike looking at the trends. Don't quote me on that. But again, with the revenue trends, that's quite attractive. So I'm hoping that they hike their dividend. So you're going to see a high payout ratio. Who cares? Funds for operation is more important. So if the FFO is good, usually you will see a dividend hike. And again, 90% of what they make go back to investors. So a lot of dividend investors are people that have REITs. The problem with REITs is if I make $500 with vici, I have to report that as $500 in income. So I get taxed on that. So a lot of people put REITs like vici into their IRA so they don't get taxed on that, or they don't have to report that as taxes. The beauty of an IRA. So if you bought one share, you made 166 with a 5.76% dividend yield. Dividend growth in 5 years is 8.66%. The number of dividend increases in the last 5 years is 5. That's quite attractive. Let's jump to the next dividend stock or real estate investment trust. The next REIT I'm going to go over is Getty Realty Corp, sitting at 2653. The average volume is 287.29K. The market cap is 1.43 billion US dollars. Year range is 2590 to 3611. Day range is 2649 to 2753. Previous close is 2735. So a lot of you are saying, who the heck are these guys? Let me go over them. So using their website as a reference, you see convenience, automotive, and retail. So Getty Realty Corp is a publicly traded net lease REIT specializing in the acquisition, financing, and development of convenience, automotive, and other single-tenant retail real estate. So they have 1,093 properties. They're in 40 states. Their portfolio is consisting, and I am heavily caffeinated on coffee right now doing this video, of legacy gas and repair, 10% of their portfolio, 17% is car wash. And I remember, if you go back to my previous videos, I discussed kind of the arms race with a lot of real estate investment trusts with car wash. So that's going to be a big thing. And still, convenience and gas, they are pretty big with that. So 4% of auto service, 1% of drive-through, 99.8% occupancy rate. That is really good. Annual base rent, 173 million, 60% top 50 MSAS, and 69% corner locations. Now, you're going to say gas, everybody's trying to replace things, but they're diversifying, and I'm quite impressed with them. So this one I'm going to hold on to for a long time. And I'll show you their revenue trends and dividend history. I'm going to start in 2014. It's a quarterly dividend. It was 20 cents. Then in 2015, 22 cents to 24 cents. And you see just a little bit of a cut, but that's all right because they're jumping up like crazy. 2016, 22 cents to 25 cents in 2016. 2017, 28 cents. 2018, 32 cents. 2019, 35 cents. 2020, 37 cents. 2021, 39 cents. And then in 2022, 41 cents. In 2023, 43 cents. 2024, 45 cents. So the dividend growth in 5 years is 5.25%. Number of dividend increases in the last 5 years is 5. Dividend yield is 6.78%. That's quite attractive for me. I like high yield dividend stocks or REITs. So if you bought one share, you made $1.80. So the dividend growth is still not too bad. I'm going to jump to another REIT. This one I've been capitalizing on, and that's Chicago Atlantic Real Estate Finance. So they are into the Mary Jane business. So I'm going to jump to them real quick, and I'll jump to the revenue trends and dividend history, but they're a new kid on the block. On their website, Chicago Atlantic Real Estate Finance, they're a market-leading mortgage REIT utilizing in significant real estate credit and Mary Jane expertise to originate senior secured loans primarily to state licensed Mary Jane operators in limited license states in the U.S. So I'm going to jump to their revenue trends. So being a new kid on the block, their revenue trends are kind of new. So this one's a risk, but I'm going to capitalize on it because they are generating some serious money. The revenue in March 2023, this is quarterly, it was 14.81 million. Then in June, it was 12.53 million. It was up year to year 20.96%. September 2023, it was 13.78 million. It was up 9.1%. December 2023, everything was up. Revenue was 15.09 million. It was up 22.92%. So the revenue is going up. That's one thing that I like. Now, this one's a little bit riskier, but with their dividend growth, because again, they're a REIT, 90% of what they make have to go back to investors. This is very attractive to me. So I'll jump to their dividend history. So they're so new that you have to be aware of the risk. I'll take the risk. If I take a hit, that's fine with this one. I get to 400 shares, see what happens. Fine. I'll take that hit. But their revenue trends, I just really like the way things are going. So quarterly dividend, 2022 was their first dividend. It was 26 cents. Then to 40 cents. Then it was at 47 cents. And then start of January 2023, it was 76 cents. And it was at 47 cents right now. And looks like every January you get a special dividend. So it's at 47 cents. So we don't know yet what the dividend growth will be in 5 years. I will take the risk. It's a new real estate investment trust. It's looking pretty good right now. I like the revenue trends. This one's a risk. You don't have to buy it because I buy it, and again, anything I buy, you don't have to buy, but I provide my rationales as to why I'm buying it. This one is really, you got to be willing to take a risk if you buy this one, and I'm willing to take the risk. Dividend yield is 11.66%. If you bought one share, you made 188. So REFI is one that I'm starting to buy a little bit more. I'm going to jump to the final dividend stock. REIT. I'm finally happy that they're going back to their principles, because they weren't like that before and it blew up in their face. Let's go over them. That's AFC Gamma. They're sitting at 1190. Again, this is another one with the Mary Jane business, and the revenue has gone down because one thing I'll go over real quick, and look at this. I mean, this is not good. I mean, the revenue has been down significantly because I will show you why there's some issues. So they were focused in the Mary Jane sector, and this kind of blew up in their face. So they're publicly traded institutional lender that originates, structures, and underwrites loans secured by commercial real estate, and other types of financing solutions. AFC Gamma targets direct lending and bridge loan opportunities, typically ranging from $5 million to $100 million across multiple real estate sectors, which with a specialization in loans to state-licensed Mary Jane operators. But this is what blew up in their face, and they look really stupid with this. And I'm finally glad that they're kind of making this change, which I'll go over. And per Stock Titan per net, AFC Gamma plans to spin off its commercial real estate portfolio into an independent, publicly traded company, Fundrise Realty Trust. The separation aims to create two pure-play debt capital providers, focusing one on the Mary Jane and commercial real estate in the southern U.S. The separation is expected to be completed by mid-2024, with AFC Gamma having a YTM of 21% in its assets, around $330 million, while Suns has a YTM of 16% assets, around $115 million. So finally, they're getting rid of that. I have no idea why they decided to have a commercial real estate and basically a Mary Jane combined. So they're finally splitting that. I'm very happy to see that. That's one thing I'm going to closely watch and potentially buy if things are looking well, because that separation is beautiful for AFC Gamma. I'm pretty sure they originally were just focusing on Mary Jane, and then they added commercial real estate to their business philosophy. That was stupid. So I just wanted to go over some of 3 high yield dividend stocks or REITs that I'm buying. I wanted to add this one as well. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you tomorrow. Do you like my decision buying REFI and these other dividend stocks or REITs? Post in the comment section below. And again, if you are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Everything's free and transparent for you. Take care and have a good one. I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use this YouTube channel for any form of financial advice. This is strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money, so make sure you do your due diligence. Do not use this YouTube channel for any form of tax purposes or tax advice, as well as financial advice. It is best to seek financial advice from a financial advisor or somebody certified to give financial advice, as well as a tax advisor to give tax advice. So go to those people for financial and tax advice, because again, this is entertainment purposes only. So again, I've lost money before. I've gained money. So just be aware that investing is a risk. I provide my rationales. I own all 3 dividend stocks. I do not own AFC Gamma. I'm closely watching on them. You take care and have a great Saturday and enjoy some March Madness.